I think currently we're in a revaluation process where market forces bring the gold price up. Today we're reaching 2,400 again. I wouldn't be surprised to see $3,000 gold within the next 12 months. Even Citigroup has published their prediction towards that target, I think earlier this week. And silver is especially of interest because silver is still trading almost 50% below its 1980 and 2011 top of $50. So there's so much catching up to do for silver.
Gold prices retreated from $2,350 during Friday's early New York session, following the release of the United States Annual Core Personal Consumption Expenditure Price Index data for March, which surpassed expectations. Despite this short-term setback, Willem Middelkoop, founder of the Commodity Discovery Fund, remains optimistic about the future trajectory of gold prices. He anticipates gold reaching $3,000 within the next 12 months, aligning with predictions from institutions like Citigroup. While gold may have experienced a decline of over 2% for the week, a closer examination of the weekly chart reveals a nuanced perspective. The latest Kitco News Weekly Gold Survey indicates that retail investors increasingly lose faith in the precious metal. However, analysts and institutional players interpret this week's consolidation as a precursor to further gains. Middelkoop delves into the intricate relationship between gold prices and liquidity in the financial system. He suggests that gold prices tend to ascend as the volume of money in circulation and debt levels escalate. The surge in U.S. government debt, exacerbated by COVID-19 pandemic stimulus measures, including Trump's $2.2 trillion relief package and President Biden's Inflation Reduction Act, has propelled national debt to record highs. With a debt-to-GDP ratio of 121%, amounting to a staggering $33.1 trillion, each American is theoretically burdened with approximately $100,000 in debt. Furthermore, Middelkoop underscores the significant ground silver must cover compared to its previous highs in 1980 and 2011, hinting at the potential for substantial price appreciation in silver. However, some experts caution that the bullish momentum in silver prices may have peaked, citing easing geopolitical tensions and waning expectations for a Federal Reserve interest rate cut. Come along as we explore Willem Middelkoop's valuable insights. Don't miss out on our latest updates. Subscribe to our channel and activate notifications. Thank you for tuning in.
The price of gold always follows the amount of, liquidity in the system, the amount of money in circulation, the amount of debt. Based on this ratio, gold could go much higher. And in a official, more formal gold revaluation plan where gold is being reintroduced into the system, you could expect gold being revalued even north of $10,000 per ounce. I think currently we're in a revaluation process where market forces bring the gold price up. Today we're reaching 2,400 again. I wouldn't be surprised to see $3,000 gold within the next 12 months. Even Citigroup has published their prediction towards that target, I think earlier this week. And silver is especially of interest because silver is still trading almost 50% below its 1980 and 2011 top of $50. So there's so much catching up to do for silver. And we run the Commodity Discovery Fund, and we are adding to our silver positions quite massively in the last few weeks because we see many indicators that silver could have a big run. And if you look at the volume indicators, the volume of trading in the SIL and SILJ, you see a very strong jump in the volume, even much more than in the GDX. Not at all. Silver tends to have a lag on development of the gold price. So it's not too strange that silver will be breaking out a few months after we've seen a gold breakout out of the gold price. And you're right, once this rally starts in silver, it often ends up, going much higher than the rally you see in gold from percentage point of view. So silver could easily go up 50%, while a 50% move for gold will be, well, that would be quite something. And especially if you look at the silver shares in previous rallies, like we've seen in 2020, 2016, the silver shares on average dumped between 100, 200, or even over 200% in a relatively short time frame, because there's so much leverage there. And especially now the valuations of silver stocks have decreased so much in the last 4 years. There's a lot of upside. I can assure you that institutional investors are not looking at silver. They might be looking at gold now, but they will play it very safe, the larger names. So I expect that's why we took a position in Newmont Mining. It went down so much, and when the generalist investors return, they will buy Barrick and Newmont and the GDX. But if we look at our investor base, high net worth, ultra high net worth, they're much more ahead of the curve. They've done their homework, many of them. They see the value out there. They're watching all these reset developments. They see what's coming from the East, what's happening with the BRICS countries. And many of these people, these investors, are trying to grow their positions in commodities and also in precious metals.
Over the past year, the BRICS alliance has pursued greater global relevance, focusing on promoting local currencies and embracing de-dollarization. Meanwhile, the United States has grappled with mounting debt and soaring inflation. Middelkoop foresees a clash between the U.S.-led Western alliance and the rising power of the BRICS bloc, including China, Russia, and India. This confrontation will shape future monetary and financial systems, potentially elevating gold and silver to pivotal roles, particularly in an emerging Eastern-centered system. The narrative of diversifying global asset holdings has been prominent in 2024. Central banks have sought to bolster gold reserves to hedge against the dollar's vulnerability. However, this trend could become a concern for both the economy and the greenback. Let's get back to the interview.
We are entering a World War III type of conflict, but it will be a whole different type of conflict compared to the First and the Second World War. This is much more a hybrid situation. And in 2013, I wrote The Big Reset, and The Big Reset has this thesis that we're in a financial endgame for the current dollar system. Every 80 to 90 years, we experience a big change in the financial system, in the geopolitical situation in which we get a new leader in the world. Now we're in the dollar system. The dollar system started in 1944 with Bretton Woods. Before that, we had the pound sterling as our world reserve currency, and we had the British Empire. And now, of course, we have China becoming so powerful that the US becomes a little frightened. And you have this huge conflict where the Western alliance, you could say, so the US and the Western friends, including Australia and Japan and South Korea, are confronted by a huge bloc coming from the East. It's the BRICS bloc, the BRICS countries, but the BRICS cooperation is getting much larger now. You have so many new countries willing to join the BRICS bloc. And for me, World War III is like the confrontation between this Western US bloc, dollar-based, dollar-centered bloc, and the Eastern BRICS bloc, which is working on their own currency, which is working on their own financial system, which is working on their own trading system. And for us as commodity investors, and that's why I spent so much time researching this and thinking about this, I think commodities, and especially gold and silver, will be part of the new system coming from the East. And Zoltan Pozsar, who's this brilliant analyst who was with Credit Suisse, well, Credit Suisse is not there anymore. There's a great example of what happens in a reset. You know, the banks like Credit Suisse fail. And Zoltan Pozsar wrote 2 years ago that we're witnessing the birth of a new monetary system coming from the East, centered around commodities. When we talk about resets, monetary resets, which happen every, 80, 90 years, or maybe you could say every 40, 50 years, because in 1971, we took the dollar off the gold standard, and that could be called Bretton Woods 2.0. But these changes only take place once in your lifetime, almost. So and people always expect these changes to come very soon and be very abrupt, like it's binary, it's 0 or it's a 1, but it's more like a process. And now we're in the end game of the current dollar system. So we're in the final inning of the current dollar system. But this doesn't mean that the dollar will collapse within the next 2 to 3 years. But 10 years from now, we'll conclude that the power of the almighty dollar is quite a bit less than it was 10 years ago. So we're very early in the game, which the BRICS club is starting to play. So that's very early. And it will take several years and maybe even a decade before this BRICS alliance will become really powerful.
BRICS nations such as Russia and China have significantly reduced their reliance on the US dollar, conducting approximately 90% of their bilateral trade without the greenback. The critical question looming is whether this trend will remain an exception or evolve into the new norm. Share your perspective in the comments below. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.